Welcome back to BestProp4U. Today we are looking closely at silver, which of course moves in tandem with gold most of the time. Currently, the entire markets in metals is actually weighed down by the situation in the Middle East because oil prices are rising again as peace prospects are dimming. The peace deal between the US and Iran expired actually yesterday, and Trump has flatly stated that he is not interested in extending it. Iran and Oman, meanwhile, are continuing to negotiate in a shipping arrangement for the Strait of Hormuz, which, of course, the US is not involved, and Washington is then unlikely to back any deal that doesn't guarantee unrestricted passage through this the route. Obviously, the situation keeps inflationary risk elevated still, which caused the global bond yields to surge to multi-year highs today. And that is why we see silver, of course, being in the red today, below the $65 mark, and there is in previous gains. But it has actually had a good run from the low of below 55, to be fair. Silver is still, of course, finding underlying support from Fed expectations of Federal Reserve rate hike following weak US economic data last week, as well as the secular industrial demand from green energy, EVs, and AI data centers. So moving to the daily chart, actually have been here, but moving on the technicals of the daily chart, because we broke outside or above the 63 saw level, we are looking potentially at a double bottom over here with the false break, of course, on the over here at the 17th of July being the bottom, right? Because it's a false break. This is actually the bottom currently. Typically what happens when we get a double bottom, we have actually broken above the neckline after the first bottom. That's the neckline. And what typically happens is that we see an extension, 100% extension of that leg. Now, if that happened, we could potentially move all the way up to around 72.50, which is the 100 Fibonacci, right? Now, importantly, and since this is a new bottom over here, right? It's not an exact double bottom with a false break. This suggests that we have 1, 2, 3, and a fourth wave currently, and we could essentially see a fifth wave higher as long as we remain what? As well as remain above wave 1, which is a 61, 60, 90, 61, let's say, which, by the way, happens to be pretty much at the same level as the middle line on the daily. And let's not forget that the daily Bollinger Bands are looking up, okay, which is important. So these are important levels that we need to pay attention to, especially also if we do pull out our Fibonacci. It comes between the we stopped at 26.3, and a potential further decline comes between the 38 and the 50 Fibonacci, with the 50 of course being below wave 1, invalidating the impulsive structure of that move. And this is important because if we don't have an impulse structure, it's more likely that we're going to end up going below the previous low at 55 or so. Now, something else important, since we are talking about Elliott waves here as well, if we pull the Fibonacci over here, right, we have to recall our guidelines of alternation. What this says is that the two corrections together should sum up to around the 100%. Look, the correction in wave 2 came to the 78.6, the correction in wave 4 did the 23.6, which means these two together sum up just over 100, which is the closest, however, Fibonacci, non-Fibonacci, respective Fibonacci levels. So it's not like that, it's likely that we could see that being the low currently. But as I said, as long as we remain above wave 1, wave 4 can essentially come lower. Okay, we could still come and retest the median line over here. We'll see how that pans out, of course, in the future. Now down on the 4-hour to see what else we might actually have on this particular lower time frame, right? Well, in this time frame, we ought to see this as a third wave with an extension, of course, coming close to the 161.8. Okay, and now we have a correction potentially in wave 2. Now look, the 100 Fibonacci around 63 here is where the level that we identified before, which is the neckline of this potential impulse, right? Of this potential double bottom, excuse me. Let's not forget the double bottom. Let me just do this quickly over here. That's the first, that's the second, okay? This is our double bottom. The neckline and the potential extension would take us up to 72, right? So if we do hold above that level, essentially this becomes a very very good looking double bottom sort of aftermath, you know, future projection, let's just call it, right? Which would of course bring us all the way up to 70, 72 with a 200 Fibo extension here at 70. Now, when we're looking at Fibos, it's important to draw our base channel, which is between the waves 1 and 2 and the 0, which shows us that we're still moving in accelerated fashion above 64, as well as though, of course, to draw the accelerated channel, which is between the first and the third waves, which are over here with a connection on the second wave. And if we look at this, there is still potential. Okay, if we do fall back within the base channel, we still remain kind of in an accelerated channel as long as we are above within this channel, right? So we could still fall in a potential wave 4 here down to 78.6 Fibo extension around 61, 62. And as long as we remain above wave 1, that could still extend higher. So this is important for context. Okay. However, there is something else important, which I noticed on the 1 hour chart. If we look at the 1 hour chart, we see that we are consolidating, of course, right? A little bit more volatile than the 4 hour, which looks flat. But what is essentially important to mention here is that we could see a double bottom and further continuation to the upside. In the shorter term, we would have a double bottom as well. And if we do manage to stop around 64, well, essentially what we might see here is an inverse head and shoulders pattern. Okay, so we get in something like this, and then off we go higher. Okay, so there is this potential right exactly where we are currently trading. There is the potential of a previous revisiting and retesting the previous formation, and of course if that also breaks loose, then we're opening the door all the way down to 61. Only losing 61 is going to invalidate the impulse. Okay, so trade plan, watch the 64 level very closely. If it holds, we'll have a completely right shoulder and a springboard for the next leg higher. If 64 breaks, look for support at 63.40 or so, 63.50, and ultimately the marker line in the sun, which is around 61. With the FOMC minutes, of course, dropping tomorrow, expect the volatility is a big cup, trade level to level, and respect your stops.